let us see the concept of gross profit and net profit. The trading and profit and loss account can be seen as combination of two accounts. So as I said, first we are going to start with the trading account, then we have came for the profit and loss account. So which is trading account and profit and loss account. The trading account, or the first part, ascertain the gross profit and profit and loss account, or the second part ascertains the net profit. The trading account ascertains the result from basic operational activities of the business. The basic operational activities involves the manufacturing, purchasing and selling of goods. It is prepared to ascertain whether selling of goods and or rendering of services to the customers have proved profitable for the business or not. Purchases is one of the main constituent of expenses in the business organization. Beside purchases, the remaining expenses are divided into two categories, which are direct expenses and indirect expenses. Direct expenses means all expenses directly connected with the manufacture or purchase of goods and bringing them to the point of sale. Then direct expenses include carriage inward, freight inward, wages, factory lighting, coal, water and fuel, royalty on production, etc. Beside purchases, four more items of expenses are listed. So these are wages, salaries, rent of buildings and bad debts. Out of these items, wages is treated as direct expenses while the other three are treated as indirect expenses. Similarly, sales constitute the main item of revenue for the business. The excess of sales over purchases and direct expenses is called gross profit. If the amount of purchases including direct expenses is more than the sales revenue, the result figure is gross loss. The computation of gross profit can be shown in the form of equation where gross profit is equal to sales minus purchases plus direct expenses. So same equation we have applied in the table where debit side we have considered all purchases along with the opening stock and direct expenses. Credit side we have considered the sales. If sales is more, that sales will be considered and these purchases and expenses will be deducted from that. So same it was taken in the equation here. Gross profit is equal to sales minus purchases plus direct expenses. Then again, the gross profit or the gross loss is transferred to the profit and loss account. The direct expenses are transferred to the debit side of the second part where profit and loss account, and all revenue or gains other than sales are transferred to the credit side of the profit and loss account. And if the total of credit side of the profit and loss account is more than the total of debit side, the difference is the net profit for the period of which it is prepared. Again, on the other hand, if the total of debit side is more than the total of credit side, the difference is net loss incurred by the business firm. In an equation, it is shown as net profit is equal to gross profit plus other incomes minus indirect expenses, where net profit or net loss so computed is transferred to the capital account in the balance sheet by way of the following entries. So here, for transferring the net profit, the entry will be profit and loss account debtor to capital account, and for transferring the net loss, capital account debtor to profit and loss account. Now let us take one illustration and we will prepare a trading account. So here the illustration is prepare a trading account from the following particulars for the year ended 31st March 2006, where the information given is opening stock is given, purchases, sales, wages. So let us take one by one entry directly to the account. So before that, let us take the table for trading account where the title will be trading account for the year ended 31st March 2006. Particulars amount, particulars amount. So here one side we have debit and one side we have credit. So now first entry we have opening stock. Opening stock will be considered in the debit side. So opening stock, in amount column we are going to write 37,500. Next entry we have purchases. Again purchases is an expenditure here. It will be considered again in the debit side. Purchases 1,05,000 in the amount column. Then we have sales. Sales is a source of income that will be recorded in the credit side. Sales in amount column 2,70,000. Then we have wages, which are direct expenses, again in the debit side. Wages in amount column 30,000. Now after recording all the entries, we have to close the account where our credit side total is more when compared to the debit side. So creditor side total is 2,70,000. Same total we are going to write in the debit side, 2,70,000, 2,70,000 minus all the above three entries. If we deduct, the balance will be 97,500, where it will be the gross profit. How it will be gross profit here? Our income is more and expenditure is less. The difference will be the profit. So gross profit 97,500. So coming to trading account. So the format will be particulars amount, particulars amount. So one side we have debit and another side we have credit. So title will be trading account in the books of Miss Anjali for the year ended 31st March 2006. And first entry given is opening stock, where we are going to record in the debit side. Opening stock in the amount column 60,000. Then we have purchases 3 lakh, and again purchase return is given, which is 18,000. Again in the debit side, purchases less returns, in bracket we can write 3 lakh minus 18,000, and the balance will be considered in the amount column, which is 2,82,000. Then we have sales. Sales is a source of income that will be recorded in the credit side. Then sales return is also given. So coming to the sales, we are going to record here sales less returns, which is 7,50,000 minus 30,000, and amount column we are going to record is 7,20,000. And next we have carriage on purchases. Again it is an expenses, will be considered in the debit side. Carriage on purchases 12,000. Carriage on sales, it is an indirect expenses, will be considered in the profit and loss account. Here we are not going to take on that. Then we have factory rent, which is 18,000. Then again it will be considered in the debit side. Factory rent in the amount column 18,000. Then we have office rent. Again when coming to the office rent, it is an indirect expenses, will be considered in the profit and loss account. Then we have dock and clearing charges 48,000. So when coming to the dock and clearing charges, it is nothing but the taxes which is paid when coming to the purchasing of raw material. It is related to the factory, then it will be considered here. Dock and clearing charges in the amount column 48,000. Then we have freight and octroi. Again it is an taxes which is paid on the boundaries of the state. Again freight and octroi 6,500. Then we have coal, gas and water. Again it is an expenses in the debit side. Coal, gas and water in the amount column 10,000. Then after recording all the entries, we have to close the account. We have to consider the excess total what we have, and that should be considered for closing the account. So when coming to the excess total, excess we have in the credit side, where we have 7,20,000. Same total we are going to consider in the debit side. So credit side total 7,20,000. Same total in the debit side 7,20,000. Minus all the expenses along with the purchases and opening stock, the difference will be 2,83,500, which is what? Gross profit 2,83,500. Let us take one more illustration where we have to prepare profit and loss account. So here the illustration is, from the following information, prepare a profit and loss account for the year ended 31st March 2005. So we have following entries here. Before that, let us take the table. Format remains the same. Particulars amount, title will be profit and loss account for the year ended 31st March 2005. An entry given is gross profit 60 3,000. So here when coming to the previous sums, you can see that gross profit was shown in the debit side, the same will be transferred to the credit side because it is a income. So in credit side we are going to record gross profit brought down in the amount column 60,000. Then whatever expenses we have, we are going to consider in the debit side, and end of the table we are going to see that whether we have net profit or net loss. Next entry we have rent. Again it is an indirect indirect expenses will be recorded in the debit side of profit and loss account. So debit side rent in amount column 5,000. Then we have salary, again it is an expenses, salary in amount column 15,000. Then we have commission paid, again commission was paid, again it is an expenses, it should be recorded in the debit side, commission paid 7,000. Then again interest paid on loan, again it is an expenses here, again in the debit side interest paid on loan in the amount column 5,000. Then we have advertising, again it is an expenses, in the debit side advertising 4,000. Then we have discount received, so discount was received here which is an income that should be recorded in the credit side, discount received 3,000. Then we have printing and stationery, again expense in the debit side, printing and stationery 2,000. Then legal charges, again expenses in the debit side, legal charges 5,000. Then we have bad debts, again it is an loss, bad debts in the amount column 1,000 again in the debit side. Then we have depreciation, again it is an non-cash expense, so again it will be recorded in the debit side, depreciation 2,000. Then we have interest received, when interest is paid it is an expense, when interest is received it is an income. So this will be recorded in the credit side, interest received, and in the amount column 4,000. Then we have loss by fire, again it will be recorded in the debit side, loss by fire 3,000. Now after recording all the entries, we have to close the account and we have to see that whether we are getting net profit or whether we are getting net loss. If the income is more and expenses are less, we will be having net profit. If the expenses are more and income is less, we will be having net loss. So when coming to the total here, credit side total was excess which is 67,000. When coming to the debit side, total expenditures are less. When we deduct all the expenses, so the balance will be 18,000. So that will be the net profit 18,000. This net profit will be transferred to the partner's capital account. In bracket we are going to write transferred to the capital account.